Hey team, I just wanted to come on and just do a refresher on the retest strategy. I think it's been a while since we've gone over it because we take a lot of impulse entries instead, and we've got a lot of new members. So I'm just gonna run through the retest strategy once more. So as most of us know by now, we wait for a break of structure and then we wait for it to come back to test that structure. The structure was once support, and as it's been broken, it's now been used as resistance. So all we're expecting it to do is to wick into this area and then make the next move bearish in this case. But we don't just take the entry as it touches the zone because anything can happen. Price can break back up, which is our fake out strategy, and continue bullish. So we've got to look out for specific things, and those specific things are specific price action, and that's what we look for. Now, on the 15-minute, this is exactly what I look for. I look for rejections into the zone and a hammer candle with a small wick at the bottom, and then we can take on the past low. Could you have taken this trade? Yes, you could have, and you would have made about 12 pips if you closed it. But the reason I don't like it is because of the 30-minute candle and the higher time frames. Now, we only look for this on the 15-minute if the higher time frames also have confluence into what I'm looking for. And what I mean by that is on the 30-minute, we've got a bullish close, which is a doji, and this is an indecision candle. It means there's indecision between the bulls and the bears, and they can't decide where they want to go. Now, if this 30-minute candle was a bearish 30-minute candle with a nice body, let's say down here, then this 15-minute hammer would be a perfect entry because the higher time frames also are in confluence with that setup. We don't just take these candles on the 15-minute for the sake of it. It's got to line up with everything else, which is the 30-minute and also the 1 hour as well. Now the 1 hour's fine. We had that wick to fill. Now, there's nothing wrong with that at all. But the 30-minute was telling me, I just don't like the look of this, especially because it's a Monday and especially due to that lots of volume as discussed we had before. So again, what I've mentioned many times before, trading is not black and white. We don't take the same thing every time. The price doesn't do the same thing every time. You've got to take into account every single factor. So the factors today were obviously it's a Monday, which means it can get very trappy and we rarely get large moves. Also, we had a lot of pre-volume before due to fundamental reasons with a gap in the market over the weekend, and also the higher time frame include, which is the 30-minute, didn't line up to what I really wanted. So in that case, I just back off and just leave it be. There's no need to chase the market, especially on Mondays. Just because you get a one confluence on the 15-minute does not mean we should enter. Everything's got to line up, guys. And I want you to start focus on that day by day. Again, another specific thing about this is also the time. Now, the time right now is actually the perfect time to take these, which is around obviously 7:30 to 8:30 a.m. In London time, which is where most volume comes. But if there's one little bit of my rules that don't line up, which is the 30-minute in this case, I do not take the trade. And you've just got to stick to your rules by that. It doesn't matter if it just melts now 100 pips. Yeah, you get a bit of FOMO, you get a bit pissed off. But in the long term, you get happy that you stuck by your rules because another time this will just break bullish and our fake out strategy will come into play. And you'll think, why the hell did I take that? Because I know that 30-minute candle is just not nice to look at, and it's also not bearish, and it's also reversal doji indecision candle. So just try to take everything into account with these trades. Again, it's not black and white. We don't do the same thing over again. You've just got to see what the market is giving you at the time. Obviously look at the specific time it's giving you that information and just act on that relevant information that you have at the time.